All right, ladies and gentlemen, good morning, good evening, good afternoon. Welcome aboard our solo Amazon. Folks, my God, it has been a minute since, Susie and I, and thanks for your flexibility last week. Susie and I obviously went out to Texas, watched our boy graduate from basic training with the Air Force. So appreciate that. That was very, very special. Very proud of our boy, obviously, and stepping up into the breach. He wants to fly. I dropped him on his head when he was a kid because he wants to fly for the Air Force. In the Florida Air Guard up in Jacksonville, they're getting rid of their F-15s and they're moving over to F-35s, and they might have a lot of pilot slots. I'm like, man, get in the front door, rush the squadron, and start your clock ticking. It can't hurt. So, very proud of my boy. But man, I had so much. Even when we were in San Antonio, I sent out trade alerts. I was trading and doing all our stuff. I had literally 2 kneeboard cards full of notes. They're all old. Everything that happened. And then now we have, China taking over AI, which I told you they would do, whether it's Amazon or China. If you're in NVIDIA, you're going to lose all your money. I guarantee you the Chinese are going to pound this shit into the dirt. It's going to be crazy. But before we get into all that stuff, we have an incredibly special guest this morning. A lot of you folks know Cody. Cody is my brother. I trust this man with my life. He and Daniel and Joe are running HRT, Healing Realty Trust. My sister's part of this now. She runs Dune Capital in New York. I'm part of this. A lot of you are part of this. A lot of you have met Cody at either our No Fallen Heroes events or Christmas parties, or maybe even at a hockey game or something like that. So Cody's here this morning. He's at the airport. Unfortunately, his grandmother passed away. He's got to get back up to the frozen tundra of Buffalo, up to the Great White North. So he doesn't have a ton of time. But I'm going to turn it over to Cody because he's going to give us a quick brief about where they are with HRT. And I'm not going to steal his thunder, but he might have a little bit of a special offer. So even if you're not an investor, you want to listen to Cody because Sabra's up 3% today. That was a Cody pick, and then also AHR. So let me go ahead and make Cody the presenter, and then I'm going to get out of his way. And you got it, my brother. The floor is yours. I'll get out of your way.
Yeah, Wizzy, make sure you give my eulogy at my funeral. It was fantastic. I appreciate the intro. Guys, it's great to see a lot of you. I'm so glad. I'm sorry that I missed the Christmas party. I had 17 people at my house, so, I couldn't make it like I did last year. But the next upcoming event I will definitely be at. So quick update, I know a lot of you guys are already invested in the company when we had absolutely no assets. Happy to report today we have $12.87 million of property under contract, and the pipeline is growing very rapidly. So just in the last 13 days here, we have put an additional $34 million of real estate under contract. Just as a background, I want to give an update on kind of what we are, what we do, and what we look for. So we target medical office buildings, obviously just because of the stability in these types of leases and these types of tenants. They're typically anchored by hospitals or large healthcare systems. The first 3 buildings that we own and operate are Cardinal Health in Ohio, Baptist Health, which is owned by Tenet Healthcare, THC is the symbol. And then our most recent acquisition in El Paso, Texas is anchored by WellMed, which is owned by United Healthcare. Quest Diagnostics is also in the building, so we actually have 2 publicly traded listed tenants on that building, but that is really the core of what we do. Why is this special? For us, we are buying right now from very unsophisticated, I guess owners and operators. So a lot of these guys have owned these buildings since they were built. Why is that important? Because for us, they don't want to go through and do several things. They want to really just make sure that their rent is collected every single month. So from a purchasing standpoint, we're able to come in and standardize a wide variety of things, everything from the property management to the leasing. We found, so today our average age of seller is just over 73 years old. And they don't want to pay $100,000-$200,000 leasing commissions to the property manager, the brokers representing. So we're finding really short walls. But for us, it's great news because that isn't factored into the price. So after we purchase, one of the first things that we do is we actually come in and standardize the leasing process throughout the entire thing. So this is just a quick snapshot. We're outperforming our initial expectations, not only from a cash-on-cash yield perspective, but also from a cap rate perspective. So you can see here, we initially underwrote a 9.7 cap rate. These buildings are performing at a 9.9 cap. The cash-on-cash yield has been way over expectation. Originally forecasted from our underwriting at 12.8. In place is actually 16.9. So we're outperforming every metric from our underwriting. We are obviously very, very, very conservative when it comes to underwriting these types of deals, just because we don't want to take any chances from a tenant standpoint. So this is really the secret sauce right here, is the data side of what we do. So my background is actually in utilizing and implementing data for the selection process. So I know a lot of you guys that were early investors seen kind of version 1.0 of our data tool. And that really was showing the infrastructure side of the VA centers and also the mental and behavioral health care centers. As we have widened our scope for some of these more attractive opportunities, one of the things that we started to do was overlay the CDC data, CMS data, which is Center for Medicare and Medicaid Service, and then also NIH data. So now what we can do is look at a very wide vision of what this looks like in the United States. So this is a picture of the United States. So what we did is we built a natural language model to aggregate all of this data and then put it in a pretty picture so we can see specifically what the infrastructure around the United States looks like. And this is it. So I'm going to show you El Paso because we just bought this building in the last 60 days. Why do we like this? Fort Bliss is right here. This is this yellow square right here. So this is the second largest military installation in the United States. For us, we noticed that there is a very large shortage of not only infrastructure, but also providers in the area. And we're going to get into a little bit.
Hey, Cody, real quick, we're still seeing the HRT current portfolio analysis slide. I don't know if you're trying to show a new one.
Can you guys hear this okay?
Yeah, I got you. Yeah, just a little background noise, but we're looking at the October 24 Healing Realty Trust current portfolio analysis slide.
This isn't showing a data tool here.
Yeah, we see your screen fine. I see 3 tabs, and the Healing Realty Trust current portfolio analysis tab is open.
What is, I mean, so
okay. I'm actually on my phone hotspot here, so let me try to fix the launch here.
Yeah, you got it, Brent. I mean, we're literally just in San Antonio. It's what an Air Force and Army town, and El Paso. And Cody's done a great job with, Google's Google because of data, right? And he's built a whole thing to gather healthcare. There we go. There it is, Cody. I got it. Go ahead.
Back. Okay, perfect. Yeah, just had to switch to a different Wi-Fi connection for my hotspot. So. Perfect. I know this probably looks insane, guys. That's because there's over 700 million pieces of data in this. So I'm going to make this as granular as possible. Again, we'll zoom in. So this is everywhere in the United States. Again, almost 1 billion pieces of data. So this tracks insurance coverage rate from private payer to TRICARE to Medicare to Medicaid. It overlays census data information. So that way we can see where income is, education levels. The reason why we like this area is El Paso's population has grown tremendously. What has not followed that same population boom? The amount of actual healthcare infrastructure. So for a region of 750,000 residents, you would want to see anywhere between 35 and 55 of these types of center. So what you're looking at here, all of the gray are all of the hospital systems. The green are the VA facilities. Obviously, you can see a large concentration around the base. And then purple is the mental and behavioral health care facilities. And this gets very granular. So, we can go through specifics as far as census information. So population 19 to 34, what the insurance coverage is for each one of these populations. And again, this is de-identified data, so I can't tell you that Cody Chandra has Medicare insurance, but we at least have the information of what types of coverage rates are in the area. So from an underwriting standpoint, why that's important is because we want to make sure that these aren't cash pay payers in this region. Again, these are medical services, so we want to make sure that the data that we're gathering is for specific that area that we're buying the building in where the coverage rates are high. So here's a little bit of cell phone metadata. So just remember, every single time you carry your cell phone around with you, it is tracking this data. And again, it's randomized, it's anonymized, so I can't tell you that Matthew Buckley left his house at 9:04, went to the hospital, got there at 9:27, stayed there for 2 hours and 30 minutes, and then left and went to McDonald's afterwards, but I know his cell phone did. So this is cell phone data that we mine. So this shows 1.9 million visits here, 320,000 visitors. So that means on average, these people went to this facility 6.14 times. You're going to notice this dwell time right here. And I told you about the shortage of healthcare infrastructure in this region, and this is the reason why we like this. But remember this 246 number. It's going to pop up here later. Visits year over year, up 5%, over the last 24 months, up 18%, and over the last 36 months, up almost 40%. This is a market that we want to target. So visit trend just gets a little bit more breakout. Here's a summary of some of the high level information, median household income, and we use our baseline for the state of Texas. Why is this so low? Again, because a large percentage of that population is on base. We all know that, pay should probably go up for active duty service members. But this is the reason why we see this household income, and that's the reason why it's so important to overlay that insurance information to understand who has TRICARE, who has Medicare, who has Medicaid, because the income then doesn't really matter because, again, these are insurance reimbursed services. And then you also look at this, the population demographic. Who is having the most children per household per capita in the United States? This population demographic right here. Why is that important? Because for a long-term stability aspect, we want to make sure, and we're going to get a little bit more into the demographic for some of the things that we look for, but want to make sure that the population growth is going to sustain long-term stable cash flows for this building. So here's a little bit more granular information on household income, education levels. This is really important. So when we buy, we want to make sure that the 65 plus is above 20% of the total market. Why is that? Because they account for the majority of healthcare spending in the United States right now. And then we want to make sure that this number is always above 25%, the 18 to 34 demographic. Because again, this is who is going to be driving the future population growth of this region. So these are our main two indicators. This is obviously above the 20% threshold, and this smashes above the 30% threshold. So again, we know we're in the right market. A little bit more population demographic information, household size information, and then right here. So we don't just track our buildings, we track the rest of the buildings in the area. So this tracks where, and again, you notice, we can't pull information from the base, obviously for security purposes. So we can just grab the surrounding areas. You can obviously see the entrance and exit of this base, the high amount of trade volume going right here. And then this is really the downtown region. You can see where our building is located right there. So why do we like this building and specifically the El Paso region? Look at where this ranks nationally. healthcare in this sector from a visitation standpoint is in the 94th percentile nationally. It's in the 95th percentile in the state of Texas, and it's number one in the region, which is a 15-mile region. That is all green lights for us. This track, so you'll notice from our existing portfolio, we don't buy downtown buildings. We're never going to be the Miamis. We're never going to be the Fort Lauderdales. We're never going to be the Manhattans, the Los Angeles. I like the secondary and tertiary markets. Why is that? Because of this. People are working from home. You know, I would guess if I could have grabbed data from a decade ago, this two numbers would have been switched. But right now, you see 40% of every single person that is going to these healthcare facilities is coming from home. Only 10% are coming from work. You can see 2% are coming from poison control. And then we track the patient visitor after they leave the facility. 33% are returning home, 7% are returning to work. There's Wiz going to McDonald's after he leaves the center. So we track all this data, and the reason why is because this arms our property managers. So the second half, what I'm going to show you, is this is how we give our property managers the tools to make sure that as a lease is coming up, we can keep tenants in our building or market to new tenants that are higher credit quality to come into our building. So these are some of the data points that we give to not only the Well Towers and the Cardinal Health and the Baptist Health of the world, but also to the property managers that are marketing to the local physicians, GPs, orthopedic surgeons. This helps them influence their practice. So you can see Monday through Friday, pretty steady. We notice that you're full staffing on Saturday. The patient visits are down by 50% on Saturday. You probably don't need a full staff on Saturday. We can get granular to the day. We notice that you're staffing your office at 6 o'clock. You probably don't need to do that. 8 o'clock is probably when you should staff. And we also notice the parking lot is very full at the end of the day, but you're sending staff home at 5 p.m. You should probably keep your staff till 7, because that's not when we start to see the fall off, is until that time. So this is just a little bit more information. Where do you want to market your services to? These are where University of Texas, El Paso. Obviously, we can't, take the data from base, but these are all the regions of where these people are coming from and where they're going to. And then this is really important. So remember that 246 minutes. Average across the country is 109 minutes. So this is more than double the average visit duration time in this area. Again, because there is a shortage of healthcare infrastructure in that region. And we can get very wide range. So this is military families and singles living on bases. Who the top influencers that they follow, demographic snapshot, presence of children, home ownership, obviously very low, 2%, because they are living on base. Would make sense they wouldn't own their home. And we can track specifically the brands that they follow, the top beauty brands, the top apparel brands, top grocery stores that they visit, some of the top podcasts and radio stations that they listen to, top news preferences, where they're getting their information from. So these are just some of the things that we track in order to better, again, identify specifically where our population is coming from. So again, this is just a case study. This is obviously broken down in the deck. You guys went through a little bit of a deeper look, but here is our portfolio snapshot, just of some of the things that are currently in the portfolio and then some of the things that are coming in. You'll notice this, the vacancy rates for all of our buildings are always going to be below 10%. And how did we achieve that? Because of that data. So by identifying population and demographic data, and then also the infrastructure data, we know where the patients are going to be and we know where the doctors are going to be. A little bit more information on NOI, debt service. Obviously, I'm happy to send these deck to you guys after. Wiz can send it over to you. But notice over here, the IRR on this building, 33.5%. That's exactly what we're looking for. We want to make sure from a return standpoint that this is delivering above average yield. Because for us, why would somebody not go buy a Sabra, a Well Tower, an AHR? Because again, they're targeting hospitals, where we're targeting those kind of 50 to 150,000 square foot in the community centers where people are living and getting their health care derived. But again, we're in the healthcare corridor, so we're close to the hospital. We're 1.3 miles away. And you're going to notice that as a reoccurring theme across the portfolio. So here's Beaumont, Texas, just outside of Houston. Again, low vacancy rate, 3% for medical, one of the lowest in the country, very important for us. And then this is just kind of an eye. The VA prosthetic centers is actually located inside of this building. So right across from the VA hospital, as you can see here. We are actively in negotiations right now to try to acquire several VA facilities across the country. Obviously, with the Mission Act getting more dollars derived towards. Nope, sorry, I just seen the messages. Again, guys, I apologize for the noise. I'm happy to come back on next week to give a little bit clearer of a presentation without the background noise. So that's what we do. That's how we do it. Again, the why. For us, it's immediate value creation. Every single time we're spending $1 out of this company, it's because we're generating $1. We're buying in-place cash flows. There's no development, there's no tenant improvement, there's no entitlement risk. We're not building anything. We're literally buying in-place practices across the United States. Okay, and the return standpoint, you know, sorry guys, wanted to pause while that was going on. The return standpoint, you know, why do we like these outpatient centers? Because they are higher returns. You know, across the United States, if you look at some of the larger healthcare players in the REIT space, they're targeting the $500 million to $1 billion hospital systems across the United States. You know, that's why they're seeing, you know, 3 caps, 4 caps, maybe a 5 cap. You know, we're doubling national average from a return standpoint. Listen, is it a little bit more work? Absolutely. You know, but that's the reason why we're using the data tools to back up this process to ease the underwriting standpoint. That way, the same amount of work that goes into a $500 million building is going into a $10 million building from an underwriting standpoint. Specific acquisitions, you know, we are very targeted. It's obviously, you know, one of the things Wiz preaches to the PGO network, you know, is being targeted. We are extremely targeted on what we look for. We make sure our building purchase price, we're never stepping out of our lane. We're always going to be in that $3 to $15 million purchase price. Target WALT, which is the weighted average lease terms, we're always going to be looking for that 3 to 4 mark. And then the minimum cap rate, a really important number, 9%. There is no reason in this type of interest rate environment to look for anything below a 9 cap. And you know, we're not reinventing the wheel, right? This has been done hundreds of times before. You're buying at 9s, financing at 6s. You know, you're creating a very, very, very attractive basis for us from a return standpoint. And then this is the pipeline. We are inundated with opportunities. The pipeline as it currently stands today is $270 million. So you can see from a cash flow standpoint, we execute on that, we're at $25 million of annual revenue. So this number is obviously bumped up. So again, we just wanted a contract on another asset last week. So, you know, we're at about $30 million right now of under contract and signed LOIs today. And then this is from a return perspective. So for us, we want to make sure that the liquidity optionality for us is the IPO route. So what we did is we engaged Piper Sandler O'Neill out of New York last year. Their managing director, Tom Holland, is representing the company. The middle of this year, we are going to go out and do a pre-IPO round with Piper Sandler for $50 million to execute on our pipeline. The plan after that is to file our S11 confidentially Q1 of next year, and then we will go through and list and file our S11 late Q1, early Q2 of 2026. Right now, we are anticipating trading either the last week of June or first week of July of 26 on the New York Stock Exchange. A little bit of information on sources and uses. And again, guys, I'm so sorry for the background noise. The team, obviously, team is everything here. Our CEO, Joe Caltabiano, I've known since 2014. I actually invested in one of his companies, Crestro Labs. They were the fourth largest cannabis company. He retired. Yeah, guys, let me try to move away from this area here. Hopefully that's a little bit better. So Joe was the founder and president of Cresco Labs. They were doing about $1 billion a year in annual sales when he retired. The company is still publicly traded. It's on a Canadian exchange as well as an OTC over-the-counter market. Myself, obviously, as you guys know, I sit on the advisory board of the No Fallen Heroes Foundation, also managing partner of AMZN. We are a venture capital fund dedicated towards emerging mental and behavioral health treatments, invested in everything from the clinic side to drug development to technology supporting the space, a little bit of everything, and that was really the foundation for this company and how it was started. Ty Zakovich, also one of the co-founders here, is our chief investment officer. He manages TGP Ventures, which is a residential and commercial investment platform. They've done about $2 billion in real estate transactions over the last decade, is the guy when it comes to commercial lending in the United States. And then there's some of the rest of the team. I'll spare you guys some of the details so we can try to wrap up with some of the noise. The board of directors, obviously very important when you're talking about an IPO. Every single member outside of Lisa has invested in this company. So they are shoulder to shoulder with us on the cap table. Jared originally started at General Growth Properties, ended up moving to the Howard Hughes Corporation, and then ended up becoming the CEO of Brookfield Properties. Was managing about 150 million square feet of commercial real estate across the country. Had about $6 billion of AUM that he was responsible for. Sean Panosian, the number one loan originator in the United States, does just over $1 billion a year in mortgages. So when we're looking from a debt standpoint, obviously having the relations with community banks across the United States, the terms are just fantastic. And those personal relationships also go a very long way. And then the last person I'll touch on is just Adam Wilkins. So Adam Wilkins is the vice president of BD at Aon Insurance. NFP was actually just acquired by Aon, so they are the second largest insurance agency in the United States. Why is that important? The insurance standpoint on our building, you can imagine, is extremely attractive. Aon does about $3.5 billion of gross premiums annually, so we have the guy for the insurance on our building. And then advisory board. You guys are going to see a very recognizable name here at the bottom. Liz is one of the co-founders with us on the company, has been here since the beginning. Obviously, the mission, hopefully, for No Fallen Heroes is going to be treating veterans across the United States at home. As these centers start to become more and more prevalent across the United States, that is the goal for us. We want to be the company that is providing the real estate for these centers to be built out. Kia is, Wiz gave a very light background on his sister for Dune Capital. Just so you guys know, she is the most powerful woman in real estate in the United States. Dune is one of the largest real estate investment companies in the world today. And Kia heads up all of the investments out of that office. And the last person I'll touch on here is Richard Gatward. He's the vice president right now of Freedom Capital Markets, was formerly at Lehman, headed up their structured convertible securities products there, obviously before that whole thing went down the toilet. But after he left Lehman, before he joined Freedom, he was actually heading up a family office that was responsible for about $2.5 billion of AUM that specifically focused into commercial real estate. And that was one of the reasons that as these next couple rounds go through, we wanted to make sure we had somebody that had deep expertise inside the family office network in this space. Here's a little bit on the Series A. So we are raising $25 million. We're just over $10 million through this offering. We have about $15 million more to go. Pre-money valuation on this round is $15 million. So this round is going to account for over 60% of the company's cap table. For us, what is important is we want to make sure that, number one, everybody that's in early is rewarded properly. But number two, we also want to make sure, because there is an equity appreciation standpoint, The dividends are obviously very important. Part of a REIT structure is we need to pay out 90% of free cash flow to all of our shareholders. But also, we wanted to make sure that there was an equity appreciation component of this. So this is the reason why we chose not to raise at NAV. The next couple of rounds will not have a pre-money valuation. They will be raised at a net asset value standpoint for the company. Let me stop sharing. I know you guys are probably sick of the noise in the background. So if there's any quick questions that I can answer for you guys before I jump on this plane, I'm happy to. And again, either later this week or early next week, I'm happy to jump back on here and spend a little bit more time with you guys.
Hey, Cody, what if are you guys still taking angels or investors? What's the current situation?
Yes, so we are. So for us to meet qualifications for our SEC listing, we need 100 shareholders. Today, we're at 88 of them. So we are taking in the minimum amount is $25,000 for this round. So yes, we are still taking investors at this time on this round.
Okay, awesome. So, and then, yeah, Charles, I'll get you this PDF. I can email this out to everybody after the brief. And then Cody, it's just Cody at healingrt.com, right?
Yep, that's it. Brent, I've seen your questions a lot. Long-term debt coming due, are they taking all your debt to keep interest rates low and keep cap rate high? So yes, assumable debt is extremely attractive to us. The average debt that we found in place across these buildings is just under 4%. It's about 3.89%. So yes, anytime there is assumable debt, we love to walk into place of those. But again, because of our relationships, just from Joe's background at Guaranteed Rate, from Sean's background, from Jared's background, we have been able to find very attractive local credit union types of terms. It's normally SOFR plus 150 to 2.25. So interest rates are, for me, selfishly, I actually hope that they stay elevated for as long as possible. Because I know that once our portfolio reaches that 100, 150, $200 million kind of benchmark, the types of warehouse debt facilities that are currently being offered to us are very attractive. So for me, I would prefer to buy while interest rates are high, selling prices are low, and then you go through and refi the entire portfolio. So that is really the game plan for us.
Awesome.
If we add to our positions, will that help the number of investors? Unfortunately, it doesn't. It does not. So we need more individual shareholders right now. I obviously, Brent, would love to have you guys come back in if you're able to. But yeah, we need 13 more investors at this point to hit that 100 threshold. With a 50,000 investment, what would you anticipate returns in 5 years or so? So let me pull this back up. So again, we modeled this out very conservatively, guys. So what my expectations for returns are versus what I actually think they're going to be. I'm going to keep it very conservative. So at IPO in July of 26, it's a almost 47% return. It's 46.9. And why is that? Again, because we're not raising from net asset value. So once this round is completed of the $25 million, layer in about 65% debt on top, you're shooking out at about an $85-90 million AUM. So the next round minimums will be raised at an $85 million valuation where that money is coming in at. So you're not only getting the equity appreciation, but then you're also getting a current 6% accrued interest. So because myself, my family, obviously a lot of my friends, management team, board, we wanted to make this very attractive. So not only is the equity appreciating in price, but you're also getting additional shares every single quarter of accrued interest. So the PIK is a payment in kind. So you're getting compounded shares from the time that you invest until the time that we IPO, which is very important. And then at that point, we'll be kicking off mid-teens, anywhere between 12 and 16% on an annual dividend basis. Again, cash flow in order to have the IRS REIT election From the taxation standpoint, we have to pay out 90%. So, expect on the low end 12%. And again, being conservative, let's just call it 15.5% from an annual return standpoint from the dividends that will be paid out quarterly. And then the equity multiples. Obviously, listen, the longer that you hold, the better place that you're going to be from a quarterly distribution standpoint. So listen, liquidity is important for some people. Some people don't want to stay in deals for, a year, 2 years, 5 years, 10 years. So we wanted to make sure the liquidity standpoint was there, and that is the reason for the IPO. So you always have a place to trade your shares out after we go public. You don't want to sit back and collect a dividend every year. But at that point, you're probably going to be expecting, again, that 12 to 15% return just from a dividend standpoint. That's not counting the equity appreciation. Obviously, you guys are tracking some of the healthcare REITs now because of Wiz. Healthcare has performed historically over the last 50 years just extremely strong. Obviously, as an aging population, cell phones and computers are driving mental and behavioral health issues, the veteran epidemic. Unfortunately, healthcare is going to be the story of our time. So just from a stability standpoint, this market is not going anywhere. It's never going to go anywhere. Hopefully this new administration is also going to drive additional benefits for the VA. The Mission Act is obviously, again, very important. You have the largest demographic of military enrollment now getting through the VA. You have the global war on terror guys now retiring, getting back into that VA system. So, luckily for us, now that the VA is offering outside VA reimbursement, you're going to see more and more of these types of centers pop up across the country. Doug, where about having your wife invest? That should add another investor that will. With these purchases being new, is there a large depreciation yearly on the K1? No, Bruce, there actually isn't. Because of the depreciation. So we are actually going through and buying at such low cost basis right now. I don't want to factor in depreciation until at least 2027. And the reason for that is because of the explosive growth of the company's portfolio over the next 24 months, I don't want to get into a situation where we're having advanced depreciation go across the portfolio. When do the funds due? We're closing checks every single day. Expectation is by the end of February to have this round closed out. So, just let me know individually what works for you, and I'm sure we can make that work. Accredited investors only allowed now. Yes, we're only allowing accredited investors at this time.
Hey, Cody, for those that don't know, what's the definition of an accredited investor?
$1 million of assets or $200,000 of yearly annual income.
Perfect.
Let me see if there's anything else in here. Okay, I think I covered everything that was in the chat. But guys, I land at 5 o'clock today, so I'll have my computer with me, and obviously working, during this next couple of days here. Tomorrow is going to be difficult for me from 8 to about 4:30 p.m., but I'll be available in the morning or afternoon, and then I am flying home Wednesday morning. So if anybody needs anything, listen, it's difficult not to get a hold of me. Text messages, phone calls, emails, send me a smoke signal. Wiz will tell you I'm 24/7, so there's never a bad time to reach me.
Awesome, my brother. All right, Cody, sorry to the family. That sucks. Prayers are with you, my brother.
I appreciate you, buddy.
Awesome. All right, ladies and gentlemen, everybody give Mr. Chandraw a virtual golf clap there. Thank you, Cody, and have a safe flight, my brother.
Thanks, buddy.
All right.
Bye, guys.
All right, folks. Shoot Cody an email. I put his email address in the chat box there, and or you could, if you didn't write it down or you need it, shoot me an email. And obviously, Cody's got family stuff tomorrow. I can send you the slides he'll probably be out for 24 hours at least, and as he said, he'll get back Wednesday. So I think there's like 19 folks in the REIT right now, or 20. I forget what Cody told me last time. So you have a lot of current TGO members in there. I know Kid, me, Mitch. Well, I'm not going to rattle off everybody, but you get it. We're in it to win it, and I'm not joking when I say, hell, that this might be my retirement, man. Especially, let's all manifest. What Cody say? July 26th, New York City on the floor of something. The New York Stock Exchange or the NASDAQ or somewhere. I plan on being there. And if you're in the No Fallen Heroes universe, this is part of it, right? Healing our heroes at home. Last week we did when we were in Texas, when Susie and I were in Texas, welcoming in a new member of the United States military. 3 of these folks were in Colorado healing. That's an Army veteran right there. That's a U.S. Air Force pararescueman. And then this is the daughter of an Air Force pilot who also became a federal law enforcement officer, a federal game warden in Colorado. And she's had some horrific experiences in PTSD, and that's them after the retreat. And that's Dr. Lance. If you don't know Dr. Lance, make sure you check out my most recent podcast. So why am I rambling about this? Because we're going to be healing our heroes at home. We're going to these treatment centers, as you all know, you ain't going to be doing MDMA or mescaline or anything in your doctor's office, right? So let me give you this podcast real quick. If you don't know who Dr. Lance is, he runs a retreat center called Monsana out in Buffalo Creek, Colorado. So that's who we're doing retreats with now out in Colorado. Moved on from the Do Good Ranch for various issues. This is a little bit, I will say, safer. This is a better environment. The Monsana Retreat Center with Dr. Lance and this big, beautiful ranch. Do Good Ranch has some work to do to get up to speed. Okay. So any other questions, concerns? Oh, by the way, smart remarks before we move on to solo Amazon. Man, we got a lot to cover. So there's the link for Dr. Lance's podcast. You can obviously listen to it on Apple Podcasts and stuff like that. So all right, let's go ahead and get going, folks. Holy crap! I mean, we're starting to fill the gap on the S&P 500. I don't even know where to start. Like I told you, I'm in San Antonio, like writing down stuff like, oh, I can't wait to next week's live trade brief. Everything's changed. I mean, talk about Donald Trump. Let me just go back 24 hours. What a time to be living in, that on Twitter, X, Donald Trump sends 2 Colombian flights full of illegal immigrants, murderous rapists, and terrorists, sending them back to Colombia where they came from. The Colombian president tells the jets to turn back to the United States. Trump grabs his cell phone and I hear it. They just turned back 2 of my jets. 25% terrorists. We're shutting down the embassy. Boom, boom. The guy's like, holy shit. Well, first he was like, well, I'm going to tariff you back. And then Trump punched even harder. And the guy's like, oh, I just didn't like you sending them home in military jets. I'll send my presidential airplane up to get them. Sorry. In the span of an hour, right? This is how this guy operates. It was beautiful. It was fantastic. And in that span of an hour, I learned that limousine latte liberals in this country prefer cheaper coffee and flowers to murderers, rapists, and terrorists. Did you see this? It's so funny. I'd love to be on the email distribution list that these people get. As soon as Trump did that sent these people to Colombia and was going to do a trade war, I hope you maggots don't mind paying more for coffee, and also, Valentine's Day coming up, you're going to pay more in flowers. And you saw it across X, like all the liberals immediately hit with that messaging. I'm like, are you fucking kidding me? We're sending these murderers, rapists, and terrorists and criminals back to Colombia, and all you can think about is you're going to pay more for coffee and maybe their cocaine. These people are nuts. So that happened in 24 hours, but we got so much more to cover. It's insane. Did you see that, kid? Trump's golfing. So I love when this guy, Joe, don't even talk to me about vacations, folks. Joe Biden lived in Delaware for his presidency on the beach. So, but Trump's on the golf course going, he said, what? Yeah, okay, let me tweet this and then I'm gonna putt. So holy crap. Let me start with this. And first of all, let me lead with, because I saw people last week like my bearish double vertical and S&P is underwater. I'm like, I don't care. First of all, why did you put it on? Don't look at me. I put it on as a what? A trade that acts as a hedge, right? This is why I don't close treads. I've had treads the day it was supposed to expire and was at max loss, hit a max profit, right? So when people, I'm like, if you ask me anything, the first thing I'm going to ask you, I'm not going to answer your question. I'm going to answer it with a question. Why'd you get into it? I didn't get into your trade. You got into your trade. So not only did this happen, and we'll dig into why the market's imploding, but we have a Fed meeting this week. Jerome Powell is going to bring the heat. I guarantee you Jerome Powell is going to bring the heat this week. He can't stand Donald Trump. And we already know that in the last Fed meeting, well, Donald Trump might do stuff in the future. So that's why we're really concerned about stuff today. Are you insane? Not once in 4 years, Jerome, or your little Fed lieutenants, did I hear the word Biden or spending or any sort of crap. But now that Trump's in charge, you're going to start blaming shit on him. So does everybody understand that? Okay. So David, very well put. The other reason I don't close a trade unless it hits max profit is what he said. It settles in cash. You run no risk of assignment, none. I let my SPX trades fly. That's why the majority of the time with my sniper shots, I shoot it. What was that Ronco easy bake oven or whatever it was? I set it and forget it. Because how many times have you, not just talking to the men in the room, prematurely ejected? So that, and I'll remind you up in Chicago, folks, I learned a lot from the professional. I was an amateur and then went to Chicago and I'm like, I have to watch my trade. And the guy's like, let's go drink. Unfortunately, back when or I'd go play racquetball. I'm like, he's like, what do you got to watch? You know what your potential max loss is, right? Yeah. Why'd you get into it? Well, here's my commit criteria. Yeah. Okay, good. Let's go. You're not going to do anything staring at the screen, dude. Let's get out of here. And we'll come back at 3:30 to watch the close. I'm like, wow. So I wanted to start with that because as the market kept climbing last week and people, I'm like, dude, be present. What's your commit criteria? Now, Amazon was on a tear. I had to bail out of some short calls and stuff like that. But I think I wrote this in the in all the groups last week. This is completely overbought. I wrote this on Friday or Thursday. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. 7. How many times have I said this before? Markets don't go up 7 days in a row, 7 or 8. They either hover and, almost every time you see a 7-day move, you get an exact opposite move. So I posted this on Friday. I said, hey, if you're not in a bearish double vertical, now you shoot one when you see one of these incredibly overbought moments here, okay? Now let's get into it. All right, so this earnings season off to a strong start. The financials loved it. Goldman Sachs, Bank of America, JP Morgan, Morgan Stanley, they're back. We talked about this a week and a half ago. Love me some Goldman Sachs. I'm in Bank of America. I'm in a synthetic stock, but Goldman Sachs, they're back, baby. They are back with Donald Trump. Did you see? Obviously I wrote a book and got a lot of you rich during the COVID crash. $2.5 million in 2.5 weeks. Loved it. Trump in Davos. Trump gave a virtual speech last week to the beautiful people in Davos. Did you see him take a flamethrower to Just flew out of my head. The Bank of America guy. Yeah, you and Jamie, it doesn't say Jamie Dimon. So you and Jamie doing awful things, debanking conservatives. You better fix that because we're gonna come after you. Holy crap. Did you see him get up after that? The guy, first of all, he looked like he had got shot in the face and then just kind of mumbled through whatever he was talking about. It was awesome. And then Bank of America put out a tweet that said, "We are proud that we don't do any of that." And conservatives flooded. They turned off the comments. I don't know if they deleted the tweet by now. All these well-known conservatives who got debanked from Bank of America, they lied. Thank you, Moynihan. They absolutely lied and got caught. So what a insane. It's so funny because the media and Democrats can't keep up with the outrage. It's happening so quick that they can't even catch their breath. I love it. All right, now here we go. NVIDIA. I am telling you, I've told you for the past couple months, Amazon will put NVIDIA out of business. They are a one-trick pony. Now, obviously, Amazon got a little bit of a route today, but they don't care. You want to buy a toothbrush in an hour? Go on Amazon. It ain't just chips. They have everything, right? Here comes China. DeepSeek. I'm telling you, folks, I still don't get AI. I use it for emails now and all sorts of other stuff and social media posts. But when it comes to it, show me how it makes money. I have seen so many articles in the past 6 months to a year. What was the recent one? They're getting rid of white collar jobs. Oh, I think I have it up here. Well, let me ripple through all this stuff. I think this might be old, but here we go. Oh, let me lead with this to prove, I forgot about this. To prove I am not some partisan hack or a maggot, Donald Trump is breaking the law, and he broke the law twice, and I'm furious about it. It's unsat. The first law was on day one, or not even day one, it was day -1. He is breaking the law. TikTok, the TikTok ban, first of all, 4 years ago, TikTok, Chinese app, it's destroying America, get rid of it. Congress, Senate, signed into law. It's law. Now the Chinese, they're not that stupid. Hey, this guy really loves, he loves people who kiss his ass. Yeah, let's just really kiss his ass. So they did. And then the CEO donates $1 million to the campaign or the inauguration. And then they have a message on the TikTok app. Thank you, President Trump, for your graciousness in restoring us. Are you insane? So Donald Trump, quote, signing an executive order that, gives it 90 days is illegal. Well, no, Wiz, the law says there's a 90-day window. Read the law. It says you have to be a deal is certain or signed. It has actual deliverables in there. He's breaking the law. It infuriates me when he does this shit. The second law that he broke was over the weekend, or was it on Friday? He fired all 13, 12, however many inspector generals at the IRS, at wherever. He has the right to do that. Of course he does. He has the right to bring in his own people. The law states a 30-day notice. You got to let Congress and everybody know. Everybody needs to know you're going to do this, and you have 30 days, and then it takes effect. Effective immediately, you're all fired. Even Chuck Grassley and Senate Republicans are like, that's illegal. Nope. He has to come to us, tell us, and then there's a 30-day window. I can't stand when he does this shit. It infuriates me. And the last time I remember pointing some of this stuff out, and I got called a fucking traitor by an old squadron mate. So if you don't see him breaking the law and you don't call it out, you're a partisan and you're part of the problem. I can't do anything about it, but call it out. But we're no better than Joe Biden, folks, and the Democrats when we do this shit. And it infuriates me. So there you go. Donald Trump is breaking the law. What's he going to do? Nothing. This is disgusting. This is already old. He launched Trump coin and then Melania coin. It's gross. It's disgusting. People are already getting wiped out. It was up $35 billion. Now he's a crypto billionaire. It's disgusting. This is already old. This was like 2 weeks ago or a week and a half ago, and it's already old. Are you, the Bibles, the sneakers, the crap, the tchotchkes that they sell, I got it. I was like, all right, it's gross. I thought you're a billionaire. This is disgusting. But right before you take office to do this is gross. It's filthy and it's gross. I can't shame this enough. Off to a good start with a lot of stuff, off to an awful start with a lot of stuff. I can't stand this. Jamie Dimon, get over it. This is great. Dimon backs Trump tariffs is good for national security. Get over it, but you can't get past it. He had a great speech. This was awesome. Listen to this. Jamie Dimon in Davos yesterday stated last week. God, it was a year ago. U.S. tariffs are an economic tool or an economic weapon, and I would put it in perspective. Yeah, it might be a little inflationary, but it's good for national security. I mean, get over it. All the Democrats in the past week suddenly care about the price of bacon and eggs. What's her name? Margaret Brennan on CBS yesterday. They're all gross people. I can't stand them. White liberal women are a national security threat. So, Mr. Vice President, eggs haven't come down in a week. Oh, now you care, Margaret. I thought you were one of the ones that said everything's great and the economy's great, everything's great, and Joe Biden's awesome and inflation's beat. But now you care about the price of eggs, like Hakeem Jeffries. But they don't care about national security. All they're going to care about is, oh, the price of eggs. So it's gross. Here we go. This is all bullish, right? Trump set to start slashing regulations across government in bonfire of red tape. This is fantastic, right? Awesome, awesome, awesome. This is why I was bullish, right? I told you buy this market with both hands because of this stuff. We're going from the most anti-business administration to the exact opposite. He's more pro-business than the first time. And remember the first time, folks, Nancy Pelosi, one of the original election deniers, 2016. He's an illegitimate president. He wasn't elected. Give me another scotch. Russia spent 200 grand in Facebook ads, and that's why. He's a Putin plant. And then impeachment. He didn't have 4 years, folks. He had one arm tied behind his back. Now he's got it, right? Now he knows what levers to pull and what to do. This is extremely bullish, okay? Well, Wiz, you just did a webinar a week and a half ago that said the exact opposite. Yeah, ladies and gentlemen, because, and this is still bullish. Let me stick with my still bullish. CEOs launch war rooms, hotlines to cope with his order blitz. It's so nice to see the absolute black and white between a politician, the guy was in DC for the majority of my life. I'm 56. Joe Biden served 50 years in Washington. He was so good that everything's awesome, right? To see a dude who was there for that long and how he was president versus a business owner. John F. Kennedy, awful president. Unionized federal employees? Are you shitting me? Yeah, I really screwed this up really bad. That's the 5th time you screwed this up. Okay, you're fired. No, I'm a government employee. I'm in a union. How do we change that? All of these people, did you see, what was it? The ATF, the chief DEI officer, this lady, within hours, they changed her name to like chief something other officer. No. And then when they closed all the DEI offices, they gave them paid leave. Fuck that. You're fired. Learn to live like the American people. My God, my company went out of business. Welcome to life. You're fired. I can't. Government employees infuriate me. Hopefully, we can change the law so people can get fired. This guy, this is already old. Again, I'm a week old, folks, but I have to cover this stuff. This guy is fantastic. Did you see the Treasury Secretary? This gives me hope. Obviously, Jerome Powell is out there on an island. I'm not going to resign and I can't be fired. The fuck you can't. I'm independent. But you got a Treasury Secretary that's not some little old lady who's going to go make $10 million giving speeches on Wall Street. His confirmation hearings, I just, and oh, by the way, the man is gay, loving husband, and beautiful kids. God bless you. Oh my God, yeah, we really don't give a shit. We hired the dude, not because he's gay and what he does with somebody else, because he was the best dude to be nominated. This is America. I love how the media doesn't cover that. People are like, oh my God, I didn't know he was gay. Why do you have to lead with that? Why I got to lead with what I do? Except you, kid. Your kid's the one exception to government employees. So again, this is really super old, but this gets to what's going to happen this week. Inflation ticked up, folks. Again, I think I'm, Kevin Bacon at the end of Animal House. All is well, remain calm. I'm the dude talking about inflation in the background. Everybody's distracted up here. The sleeper story is the Fed, folks. The Federal Reserve and inflation going up. Consumer prices, ladies and gentlemen, inflation is raging. I've shown you the chart repeatedly. It's going up. It ain't going down. And the fact that the last time the Federal Reserve got together, they tried to blame Trump. Thankfully, the Wall Street Journal calling out their bullshit, but I don't think they care. You want to talk about some drama coming up? This is the drama. Donna, when these guys really start sticking it to Trump, the Fed, he's going to be on the seventh hole going, okay, that's it. Jerome, you're fired. You can't fire me. Oh my God. The markets are going to go batshit, folks. I guarantee you. I think, ladies and gentlemen, that I am going to make this prediction. I think I already made it formally. I will make it formally if I didn't. The Federal Reserve will be forced to raise rates this year. You will not get a rate cut this year. Sorry, Goose. We will not get a rate cut this year. You can take that to the bank. Unless I'm completely wrong, unless inflation going up for 5 months in a row suddenly goes down. Do you know how far above our target rate we are? The Fed's target rate's 2. We're up here 2.9. Under Trump, the first, it was like 1.5-ish. Ladies and gentlemen, they have to raise rates. Somebody tell me, because I'm new at all this, what's going to happen with this 2-year rip your face off rally that was on hope of rate cuts when, not if, they're going to raise rates. This is bullshit. I don't know if all the bullish Trump stuff, the less regulations, the whatever, is going to countermand the Fed. Quick reminder, middle of COVID, recycling bin full of trading books. They're all out of date. The only thing that's going to matter is the Fed. I don't care about earnings. Nobody cares. It's all going to be the Fed. You got it, Mark. That's, right? Here at TOPGUN Options, we don't care which way the market's going, up, down, or sideways. As an American, I prefer a market because I don't like people getting hammered. But those people should also have joined TOPGUN. That's their problem. Okay, here we go. While Cody was talking, I sold a short call on my Amazon synthetic stock, the 237.5. Let's go pull up a quick look. Folks, Amazon, what a rip your face off rally going into earnings. But earnings are, what are earnings? The Feb Did we get a confirmation yet? Feb 6th, confirmed. And again, if I had more time, I'd go to the Amazon investor relations page and confirm the confirmation. But I've seen this wrong. Let's just stick with it. But look at Amazon, man. But we're back to where we lifted off. This is a better looking chart. So we got back to we got back to the chop, 225, right? This is this 225 chop right there, which is just happens to be what? The 50-day moving or 20-day moving average. So we're at the 20, okay? And there's some no man's land between the circulatory system here. But I can't remember the last time I saw like a rip your face off 3-4 weeks in front of earnings. But this pullback, folks, is obviously NVIDIA driven. The NASDAQ was down 4%. S&P ain't super filling the gap here, folks. Let's look at SPX. So and remember, we trade in $25 increments on SPX, up to a 25, and we're almost up to a 25 and failed there. So it's the battle of 6,000 right now. Again, let me be clear, folks. This NVIDIA Chinese artificial upstart. Let me be the old man on the front porch. China is an existential threat to the United States. It is the #1 national security risk. They will rule the world if we don't wake up, period. Obama lied to us. So I'm going to pull out of the Middle East and do a pivot to the Pacific. Nope, you pulled out of the Middle East. It became a shithole. The JV team, ISIS, you called them, remember? They flared up again, and you didn't pivot to the Pacific. I remember a Thanksgiving where I saw images of Chinese ships carrying loads of dirt, low tide on an atoll, made a runway and said, "Do China." Great. Obama didn't do shit. So NVIDIA down 13%, a $400 billion kick in the jimmy. I'm telling you, ladies and gentlemen, the Chinese will eat our lunch in AI. So and when was this? 2015? Somebody Google it if you're bored. I remember Vladimir Putin at a round table of Russian tech oligarchs. This is before Ukraine and all that type of shit, where he said, whoever rules AI is going to rule the world. And he went around the table like, if you're not, I'll shoot you. We have to be. This guy saw this 10 years ago. He's like, AI. I wasn't even super big on that shit back then. I'm like, whatever, Putin. China and Russia, folks, they're getting their ass kicked they're getting their ass neutralized in a meat grinder. All the other shit, folks, are what you got to worry about. The cyber warfare. I've always told you that the first bullet shot in a war with China ain't a bullet. It's a keystroke, and they've already shot it. It's already going on. Okay, so obviously Amazon had a sympathetic implosion with the tech names, and then it completely filled the gap. Let me fall on my sword a little bit. Well, not really. We leveled off for about a week. I was getting blown out of short calls in here, folks. So let's do a little bit of a review. When something's on a tear, say it with me. Either join it, yeah, we're on a tear, or get out of the way, right? Don't keep selling calls against your long-term bullish position if the thing's ripping. Enjoy it. You're long the stock, synthetically. Smoke a cigar and put your boots on the desk. Stop getting run over with the short calls. I haven't done this in a while, but I'm going to do it right now. This is your Venn diagram, right? Kamala loves Venn diagrams. You ready? Sideways. If something is sideways, and I'm talking 30 days out. This was the math that I came up with in Chicago with all the pros. 30 days out. Now we have weekly options, and you can interpolate. If a stock is flat, I tend to sell front month upside calls, right? That are 2.5 to 5% out of the money. Okay, write this down. If you haven't watched your training like you're supposed to, 2.5% to 5% out of the money above the stock price. If the stock is doing this, flat. Everybody understand that. If the stock is on a gentle climb schedule, right? 5 to 7.5%. Why? Well, it's going up. Give yourself a little breathing room. Does everybody understand this? Give me a vertical head nod. Flat, sell front month upside calls 2.5 to 5% out of the money. Gentle climb. What's the definition of a gentle climb, Wiz? Like Supreme Court Justice Potter's quote about pornography. I know when I see it. If something is on a tear, that's a tear. Don't sell any front month upside calls, folks. Sit on your hands. And the final one is this. If the stock is going down, I will sell sometimes in the money calls. What? You heard me. There's a hell of a lot more premium. If look at what Amazon did here. That was a week and a half of going down. You could sell either at the money, or to get a little, sometimes a lot more premium, you could sell in the money. But obviously you have to be pretty damn confident that you can do what? That the stock is going down. Does everybody understand that? Randy, I love Randy because he knows he wrote that tongue in cheek. I'm old enough to remember Heinz ketchup merging with whatever it was and 80,000 call options appearing out of the blue. Oh yeah, that was the People's Liberation Army. I am old enough to remember Goldman Sachs, JP Morgan, Morgan Stanley going to DC and begging. Those companies don't go to DC to beg for anything unless it's what? We're getting hacked. The Chinese government, the People's Liberation Army is in all of our stuff. They're reading our emails. Hey, cream of some young guy. Goldman's got a deal coming up. Let's go ahead and trade it. Right? So, any questions about the short call game plan here? Tear, don't do anything. Gentle, let's see if we can find a gentle climb. Yeah, these were gentle climbs right here and right here. That's a tear. Understood? And then obviously that's sideways. That's sideways. That was a tear. Any questions on that? Okay. All right. Yeah, SIBO's ripping, baby. And was there any news? That's a good looking run in SIBO. We're in solo Amazon, so I'm going to ignore that. But folks, if get long-term bullish on SIBO, we'll talk about this tomorrow on the primary live trade brief. Okay, Amazon earnings supposed to be confirmed on February 6th. It's filling the gap right now with the NVIDIA, whatever it is. So we're getting back up to where we are. I think we hover. I wouldn't mind a weekly iron condor. I got blown out I was in a bear call. What did I do last week? I ended up legging into an iron butterfly, right? Because it popped, it wasn't coming down. So I sold a bear call spread at the same strike as the bull put spread. That makes what's called an iron butterfly. That is what the TOPGUN options patch has on it. All right. So a little bit of a loss, but I negated the max potential loss because I got into an iron butterfly. All right. So let's just look at the options chain for the week. $7. I think we're going to settle. Usually, after a monster 790, usually after a monster run like this, and this is weird because we had monster run, I thought we'd hover. Obviously, we got the NVIDIA stuff, and Amazon's already filled the gap. Hold on, let's go look at NVIDIA. I don't care about NVIDIA. I just know putting all your eggs in one NVIDIA basket is going to hurt a lot of people. I talked to a doctor. Oh, what did I tell you? I said NVIDIA's $100 stock. Is it back down to there? Or no, I said 90. Sorry, not 100. It's got 90 written all over it, folks. This is bad. If you don't think China has hacked into everything NVIDIA owns and knows their algorithms for making the perfect chip, you're a fool. Do you know that, what is it, 40%, 2/3, I forget, a majority of the precious materials to go into your chips are made where, or come from where? China. That's also huge. Breaking news, People's Liberation Army Navy ships. Isn't that weird? It's People's Liberation's Army, but they have a Navy. It's all Army, but we do have a Navy. Are invading Taiwan. Donald Trump is furious, and sanctions and all these chip stocks will be destroyed. That will happen. Yep, Mike, you got it. When something's on a tear, either join it or get out of the way. Okay. So let's go back to Amazon. I pulled NVIDIA up because I wanted to see the damage. What's it down right now? Holy shit, 15%, and it's going lower. It's a $90 stock, folks. I guarantee you, man. Woo. Good call on the disaster put, Greg. And it's really kind of running out of, it's got to hover. This will be deadly. Now I know, I'm already starting to see people, CNBC, like, oh, it's, over China. Do me a favor, or do you a favor, underestimate China. Just underestimate them and see how that turns out for you. If you don't, folks, I'm old enough to remember Clinton. Whatever, they hacked into our submarine, it set back our naval sub program by decades, 2-3 decades. The Chinese hack. They're in everything. Look at their whatever it is, 31 or something. Look at their brand new stealth fighters. Wonder what they look like. So, all right, I like Amazon getting back into a range for the week pre-earnings. What was it? $7, $7 wide. That would be 14 total. Let me just go look at the chart again real quick. So down to that 225, which we just bounced off. Let's go look. I almost like an iron condor right now, setting one on and not legging into one. Let's just build one and see what it looks like. 227.5, 225, and I'm probably going to go down a little bit. Nice. And then let me just do some quick mental math. 237.5, 240. Yes, call. I haven't done one of these in a while where I start with the iron condor. 237.5. What are you doing? Right there, 240. How about my Eagles, man? I love it. This is a good looking iron condor for the week. And remember, you don't have to stay in an iron condor, folks, to expiration to try and get max profit. If, as Amazon moves around this week, you get in and out of the individual spreads. Close them for profit, loss, roll them up, roll them down. So let me brief this. This will be my Amazon trade for the week. Your Chiefs. I can't stand the Chiefs. Mahomes, his paper mache body, because the calls yesterday were even worse than the week before. It's a disgrace. Travis Kelce and what's her name? It's gross. I don't even want another Eagles Chiefs Super Bowl. And I'm an Eagles fan. I was not an Eagles fan for 3 years when they were kneeling. It's funny because my wife Susie's like, "Where's your Eagles jerseys and your hats?" I'm like, Yeah, I threw them out years ago. I'm that guy. I threw that shit out years ago. Now I got to buy new merch. Sell. So let's go through this, folks. The 227.5, 225 bull put spread. Okay, that's a credit spread, isn't it? Remember, he is Mr. Pfizer. It's gross. Bull put spread. So if you're new, welcome aboard. Go watch your Iron Condor training. An Iron Condor is a range-bound trade. Amazon's going to move around this week, but I'm saying it's going to stay in this range. We're already back up to the top here. Let me, you know what? I just caught myself. I'm not doing, no, I'm not. I'm not doing it. Why the silence? Because I'm an idiot. I can't believe I forgot about this, folks. I do not think, I think Jerome's bringing the heat this week. Let's, and I'm sorry I'm going long, obviously. Folks, we got to talk. If you think this week Jerome Powell's just going to hold what he got and kind of give Jerome Powell speak, then maybe an Iron Condor. There is no way, and I'm talking as me now, your flight instructor. This is the first Fed meeting and first press conference under Donald Trump for Jerome Powell. If you don't think the reporters are going to be all over him like, and asking about Trump and so, Colombia and tariffs and what do you think that's going to do to inflation? I completely forgot about this. I'm holding my trudge, folks. It gained $200 today. It was at a max loss. Now it's climbing off the mat. I'm not doing anything bullish for this week at all. The trend is not good. No, he's not. No. We're not raising this week. But it's the words, right? Somebody already posted the odds, like a 2%. If they raise rates this week, I predict we will go down to I will make a max profit on my trudge, which I would be happy with, and we would go down to like the 150 day. It would be obscene implosion. I don't think he will because of that, right? The last rate cut was what? You don't deserve it, but we're going to give it to you because you all expect it. And if we didn't give it to you, you'd all freak out. So here's your cut, but don't expect any more. The spoken word this week, folks, will be insane. I think I say this for every press conference, like, oh my God, this is going to be. It's sad. I remember decades ago, I don't give a fuck about the Fed. Nobody cared. It was like stuffy banker talk in the background. Nobody gave a shit. It was earnings. It was fundamentals. It was volatility. Wasn't a Fed. This week will be the massive fireworks. It's only Monday, folks. And we got Colombia and trade war and China and Pete Hegseth and the Pentagon. We will see absolute insanity until Wednesday. And then it is going to get ugly. So if anything, yeah, exactly. Whoever wrote that, I already sold my calls for the week. I sold the SIBO 205s and I sold the 237.5s. If you're itching, go get some penicillin. But if you want a bear call spread on or any, I would do this bear call spread on Amazon. It's right at the money straddle. You're risking 189 to make $61. It's a high probability trade, 72% probability. Risk to reward is above my 1 to 0.25. Let me at least grab this screenshot and say, hey, if you're up for some, I could do this. I mean, I have the short call on, right? The short call is like a bear call spread. I treat it as such. I close it at a 7, 8, 9 profit, or I eject it double the credit I took in. So I'll do this. Amazon 127. So double the credit you take in. Write this down on your trade journal, wherever, $1.20, $1.22. If Amazon, I'm wrong, Jerome was great, Amazon's running more into earnings, you eject at $1.20 if it increases to $1.20. Okay. Now, risking 189 to make 61, 73% probability. On this screen is where we talk about the good. 7, 8, 9. If I'm looking at a 70, 80, 90% profit on the credit I took in, we close it. I'll do this. I'll do this trade. Amazon 127 metric. I would not do the bull put spread. Folks, I could be wrong. Clearly, you know, if Jerome doesn't bring the heat this week, you know, and the rally continues. But looking at SPX right now, folks, it ain't looking too hot. All right, let me go put this in the. Hey, if all my solo Amazon people, oh, and I forgot about this. Scott, thanks for the mutual support. For all Android phone users, I now have vibrate alerts, and a little number comes on as Go Collab app. They fixed it for Android. Okay, so everybody good? Just about everybody should be good now that they fixed it for Android. All right, so new weekly Amazon bear call spread and short calls at everyone. So everyone in solo Amazon is going to get this alert. I sold 237.5 calls against my SIN stock. Now I'm going to add the images. Oh, that's great, Scott. See, appreciate your patience. I knew all this stuff was going to manifest itself. There's that image. There's that image. All right, there's the trade. Let me grab that so I have to repaste it every time. I don't have to send. Now, when I post this in the hunters and lifestyle, I don't have to at everyone because the hunters, or no, some hunters aren't in solo Amazon. So I do new weekly Amazon. Then I got to get going. I got another meeting. Do this. Shoot me an email, folks, if you want to get into the REIT, or if you wrote down Cody's email, or just shoot me an email and I'll add Cody to the email with you and response. This is a good deal, folks, because that last round, the other institutional round, it was $100 grand, or it was 250. But now that they have to get up to the 100 level, they're like, no, those are rookie numbers. Well, we got to bump our numbers up. They got to get up to the 100 people. So you're welcome. Amazon weekly bear call spread and short calls. All right. Any other questions, concerns? Oh, by the ways, sorry I went long. Obviously, Cody, I wanted to get Cody in here. He's like, dude, we're gonna open it up a little bit, and you guys are the first people we want to go to. Let me check out my mastermind group to see if we got any intel going on. They're pounding NVIDIA into the dirt. I love it. Well, okay. Good stuff, folks. Everybody, I just got my alerts. I'm good. And SPX ain't getting off the mat, folks. I love this. My Tredge is back to life. Obama teachable moment here, folks. The Tredge is back to life. Let me show you SPX. That's not a good looking SPX chart, folks. It's sickly right now. See this? We're trying. No, we're not. That's bad. Kevin, I saw you just shot a sniper, or you shot a sniper earlier. Good on you, man. Well done. Cool. Hey, solo Amazon, folks, remember the Amazon trade alert thread? It's locked. It's only for solo Amazon members. Keep this for the trades. This is where I post my Amazon trades, obviously in Lifetime and the Hunters. But the intel and commentary thread is where we should be talking back and forth, okay? Everybody, but everybody else has their own thing. But if you're in solo Amazon and you're just in solo Amazon, join me in the ready room, man. I put some psychedelic stuff in here. This was a schedule for a tie, all the medicines that are coming out in the next year or two. I post all my stuff in here for, for everybody who's not in one of the elite services, okay? So make sure you're in the ready room and being active. I feel like I'm talking to myself in here, but there's 500 some people in here, 559 members that could be in here talking. So if not, I'll just stay in the Hunters and the Lifetime folks. Okay, I got to go. I got an 11:30 call. All right, folks, have a great rest of your day. Wow, man, marathon. I'm looking forward to this week. Jerome Powell's going to be big, folks. So make sure you stay looking at these threads and everything like that, because this is where I post all my stuff, okay? I'll get the replay posted here shortly, and I'll also send out an email after I get done my series of calls here, okay? God bless, fights on, namaste, and I'll see you tomorrow for primary brief. Fights on, cheers.